Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets? Well, they just want to keep pushing it up higher, right? We get one big down day and then we're pushed right back up, pushing at a new record high again. They're going to push this market up higher, but I'm still expecting a pullback. Now, it's very interesting. The VIX is the volatility index. And if you look at the Bollinger Bands on the VIX, they were really wide apart. Now they've come in very tight right now. What this usually means is something big is going to happen in the stock market. It's going to happen relatively soon. This could be a big explosion higher or a big explosion lower. Now the VIX is trading around 15. Now back in April, it was trading around 15 and exploded up to 60. That's when the market had that 20% pullback. Now something similar is going to happen here. Now warning B, it could also be an explosion higher. But when you get the VIX Bollinger Bands in a very tight range, it means something big is going to happen. There's going to be a breakout one way or the other. But I think that the VIX will be going up higher, and I think this market will be coming in. That's just my take. Yours is probably completely different. Now, I don't think it's the big crash yet, no. But I do think the market's going to come in so they can buy the stocks at a lower price before they push it up one more time. All right, let's talk a little bit today about the housing market. It's very fascinating, right? I mean, Scott Bessent, he comes out and he says that the U.S. is going to declare a national housing emergency. A national housing emergency, but not to worry. Donald's going to fix it. Now, this is the worst news I've ever heard for housing. Anytime you got the government coming to fix something, you know this is just a deadly problem for the market, right? Now, it's already an affordability crisis, and they want to fix the affordability of the housing market, right? Nobody can afford a house. They want to make them affordable. But now here's the funny part. Do they want the houses to come down? Absolutely not. They wouldn't get their property taxes. They want to get the property taxes, right? So they don't want the house prices to come down. So how are they going to make them more affordable? Well, this is a problem, right? Now, one way that they suggested was that they're going to make housing exempt from any tariffs. Now, that's really interesting to me because Donald, he came and explained to all of us how nobody in the United States pays the tariffs. It's all paid by foreign countries. So how's that going to help the market if the foreign countries already paying the tariffs, makes them exempt? But the United States, we don't pay for the tariffs. It's all those foreign countries paying for the tariffs, right? Well, I guess the Donald really knows that it's you and me who pays the tariffs. So he's going to make it exempt for the housing industry, meaning you can bring in any supplies to build houses tariff exempt. Okay, well, that may help a little bit, right? But I don't think that's going to solve the problem. A lot of people think that interest rates is the problem, right? Interest rates hovering, well, they're below 7% right now. Now, I'm of the belief that interest rates will push above 10%. We'll reach double-digit mortgage rates, not interest rates on the short end. Those, I do believe they're going to cut them to zero, right? Now, they're going to do a quarter point or half point in September, but eventually they'll be dropping it a point, and all the way to zero as the stock market starts to come down, because they got to hold that up too. They don't want the stock market to come down, and they don't want the housing market to come down. Now, the funny part is they're going to get both of them dropping like a rock, and that's where they're going to fire up the printing press again. Now, maybe it takes a little time to play out, but I promise they're both going to be falling like a rock soon. Going to reduce the short term of the curve to zero, but the long term of the curve going to be 10, 12, 14%. You see, it's not really interest rates that are the problem here. Now, when I bought my first house, I was very lucky to get a loan at 14%. But you know what? Houses were affordable at 14% because in my area, they were under 100,000. Now they're 6.5% rates, but they're not affordable. Why? Because the same house I was buying for 100,000 is now $1.5 million. See, houses went up 15 times since I bought my first house. Houses is typically a very good investment, but I'm going to explain to you why you do not want to buy a house right now if you don't have to. You see, we got a big problem coming. Now, we got these high prices up here. Now, there's a lot of cancellations in listings. Me, a realtor, we do not like when someone lists a house with us and then they pull it off the market. Why? Because we've done all the work to market the property. We've got it on the MLS. We got it looking pretty. We got it staged, and all of a sudden they change their minds. They don't want to sell anymore. Well, why don't they want to sell? They don't want to sell because they can't get the price that Billy Bob sold at. See, Billy Bob sold up here, and now we come down about 10% from where Billy Bob sold at. And these people, they want the same as Billy Bob, right? Because their house is better than Billy Bob's, but Billy Bob sold earlier. See, the first one out, they get the high price, and then the next one goes, and then the next one goes, and then the next one goes. If you're thinking of going, you want to be early. You don't want to be late. You don't want to be chasing the market down. Now, I'm willing to bet that prices that Billy Bob got is not going to be seen for another decade, maybe another 2 decades. I'm going to explain why. Now, right now, we're in the slow grind lower, and that's the way this is going to play out until the whole financial system gets in a little trouble, till the bond market starts to clap and the interest rate starts to spike up, right? It goes 10, 12, 14%, and you're going to see your house go lower and lower really quickly then. But right now, it's just going to be a slow grind lower. But the reason it's not going to be coming back for a decade or two is because of us lovely boomers, right? Some of us starting to age out. Age out means kick the bucket. Some of us dying off, right? And those houses are being placed on the market. That's just the tip of the iceberg here. And that's why this is going to play out over the next 10 to 20 years. And I mean, us baby boomers, we will all age out 20 years from now. Most of us will be gone. Our houses will be empty. There'll be for sale signs in front of each one of them, and there'll be no buyers. Well, no buyers at these prices up here. Now, if you go buy up here, you can get really close to where Billy Bob sold at, I mean, you could almost pay what he paid, right? What he sold at. You could be up right at the top, right? So if you want to buy at the top, you want to do it now. But if you want to write it down, it's going to take some time. Baby boomers aging out. But 10, 20 years from now, houses will be half the price they are now, even with the trillions of dollars that we're going to print, right? But it's going to be a quicker fall than that, because I don't really think we even have 3 years left in the current system we're trading in, which is the fiat system. They're trying to get rid of that and put us into the central bank digital currencies, put us into the stable coins, right? They're trying to get rid of the system. They know the system's broken, right? And I mean, you can talk about the system being broken, right? I mean, look, at 1970, an ounce of gold was like $35, right? And now it's 3,500. If it does that again, think about it. Okay, they've wiped out 99% of the dollar already, but there's still 1% left, right? But they're going to come after that 1%, and they're going to do it a lot faster this time. It took from 1970 to, let's call it 50 years, right? It took 50 years to lose 99% of the purchasing power against gold, which is real money. Now, they got 1% of that purchasing power left. Now, if they go after that 1% and lose 99% of that, well, what would happen? Gold would go from 3,500 to 35,000 to 350,000 an ounce of gold, ounce of gold, $350,000. People will say that's crazy. People would say you're an idiot. People would lock you up for saying such stuff. You say 1970 was $35. At 50 years, it'd be $3,500. People would have locked you up back then. I mean, we still had the state institutions for the crazy people. They'd put the white jacket on you and they'd haul you off. So from 3,500 to 35,000 to 350,000, and that 350,000 number is going to be quicker than 50 years. Now, I think by the time that Donald gets out of office, we'll be well above 6,000 ounce. Goldman Sachs came out and they said 5,000 ounces just around the corner because of how the White House, the government, right? How they want to control the Federal Reserve. See, these are supposed to be independent. As soon as you make them one in the same, you're going to see gold just take off because the Donald, he wants to lower that rate to zero. And when he does, you're going to have $6,000 gold. Donald's an overachiever. Donald loves gold. He probably owns a lot of it, decorated the White House with gold. So he's a big believer. The man that has the gold makes the rules, whatever he tweeted out to everybody. It's the golden age. Now, it's funny. All the Bitcoiners are a little upset with him. They thought it was going to be the Bitcoin age, but it's really the golden age. But back to the housing market. Okay, so housing market's going to take decades to return to this level. You see, the problem is the government. The problem is the government, right? They created the problem. How'd they create the problem? Well, they lowered rates to 0% for 16 years. They gave corporations money at 0%, told them to go out and spend it. They didn't have anything to spend it on. So they said, hey, we'll come after the residential market and we can rent the houses out and make 4% on our money. Can't get 4% when they lowered them to zero for 16 years. So you have all the corporations in there, right? So you got to get them out. I would double, here's what I'd do. I'd put a tariff on them, right? A tariff on corporations, 50% extra if they want to buy a house, right? And then I'd double the property tax on them. Whatever property taxes you're paying, they're paying twice as much, right? That would pretty much eliminate the corporations. There's ways to fix this. Government doesn't want it fixed. They don't want that price to come down. You see, what we got is the 50% of people that own homes, they want the price to keep going up. Now, why they want that, I really don't know, because what goes up with that? The property tax goes up, the insurance goes up, the homeowners associations go up, the maintenance fees go up. Why do they want the price to go up? Well, they sure don't want them to come down because then they lost all their money, right? So the people that are renting, they'd like to see house prices drop by 50%. And I think they'll drop by that and probably even more. And I say 40% just to be conservative. I don't want to scare anybody. A lot of people get scared watching my channel and they unsubscribe. And that's okay. If you're afraid, hit the unsubscribe button. But if you like this stuff, you punch that subscribe button because we talk about reality here. And so we got to get rid of the corporations in the housing market. What else would I do? I'd get rid of the foreign buyers. Same situation. Put a 50% tariff on them, charge them double the property taxes. See how many foreigners are coming into our country buying our houses. But Mike, that would lower the price of all the houses. Yes, it would. About 40%, right? If you get rid of corporations, get rid of the foreigners, house prices drop by 40%. Now, the people that own the houses, they're crying, no, we don't want that. We don't want that. And I understand, right? You don't want to see your equity get wiped out. You don't want to see yourself lose everything. Everything you got is in the house. See, it used to be where 30% of your income would pay for your mortgage and your insurance, your property taxes. Now it's about 58%. It's over 50% right now. I mean, that's crazy. I mean, you just go back 4 years, right? 4 years ago, well, we had 3% mortgage rates. Now we doubled them, 6.5%, 7%. So mortgage rates have doubled, right? Just in the last 4 years. In the last 4 years, prices of homes, what's happened? Gone up about 30, 40%, right? So you got high-priced homes with high-priced mortgage rates. It makes them the most unaffordable ever. It's an affordability factor. Now, affordability is a big problem, but don't worry. They're declaring a national emergency. The Donald to the rescue. What he doesn't get is a job market. Jobs are going away. You lose your living. It's the way you make your living, right? That's the way you pay your mortgage. Lose your job. Those houses get dumped onto the market. Now, in California, we got the worst leaders. I mean, you think you got bad leaders on the federal level. In California, we got absolutely the worst leaders ever. Now, there's a new law coming out. This is fascinating to me, right? So there's first deed of trust. When you go buy your house, you get a mortgage from the bank, right? All right, well, you've run out of money. You still have some equity in there, a couple $100,000, right? So you go get a HELOC loan, which is known as a second mortgage, right? So you get the HELOC loan, but now you're all tapped out. You don't have any way to get the equity out of your house because there's no more equity because it's starting to go down, right? So you got this HELOC loan. Well, you can't make the payment on it because you got to pay on the first. So you decide you can't make the payment on the HELOC loan. So they go out and they start the foreclosure process. Well, thanks to the California law coming, now you're not going to be able to foreclose on second mortgages. this. I mean, that's incredible to me. Let's take the Constitution, throw it out the window. All contract law has to go with it, right? Because you signed for that mortgage. You don't make your payment. You back it up with your house. You're going to lose your house. It's just the way things work. But not in California. We got Governor Newsom in there, the worst leader in the history of the world, in my opinion, my humble opinion. But with California, I love the state, hate the government. You see, you don't have to hate the United States. You can hate the government with loving the United States. I love my country. I'm so against the government. Why am I against the government? Because they keep printing money. What do they do when they print money? They steal money from me. They steal money from you. Every dollar they print is stolen money from us. That's why I get out of the system, get into the real money, get into the gold and silver. But this housing market, we got big problems, right? I mean, we got big problems. It's not going to be able to be fixed overnight. I mean, I don't care what emergency they're declaring. I don't care if they don't have any tariffs on housing supplies. It's not going to fix the problem. How it's going to fix the problem? Getting the government out of there. Sell the $3 trillion in mortgages they bought. That'll drop the prices about 30-40%. Stop subsidizing mortgages, right? Don't guarantee them. Let the banks make the decision. Let the banks decide if that person should be loaned to. No, the government wants everybody to have a loan. So they subsidize them. Fannie Mae, Freddie Mac. Get the government out of the mortgage business. Get the government out of the housing business. And don't let the government declare a national emergency for housing. They're going to destroy the market. They want them to go higher and higher and higher. But they want you to be the one in there, the sucker, the bag holder, holding the bag. Anyways, if you like this stuff, punch the subscribe button. Get out there today. Enjoy the day. Bye-bye now.